Tesla investor and stock expert Ron Baron has made some interesting predictions about Tesla stock, despite the plunging stock price and the entry of a more affordable electric vehicle into the car market. The longtime Tesla bull believes that Tesla is a top-selling brand in the EV industry, even as many of its competitors strive to offer more equal technology and production build. Ron Baron has said that he expects Tesla to deliver outsized gains that will ultimately propel the company to a valuation of about $4.5 trillion. Baron believes that the car company's shares will also soar more than 570% in the future. You definitely don't want to miss out on this one. Hey guys, welcome back to Tesla Tomorrow. There is a possibility that the FED will be pausing interest rate hikes. Market expectations are running high, and policymakers are likely to approve another rate hike, but this time opting for a 0.5 percentage point or 50 basis point move. Federal Reserve Governor Christopher Waller recently said that he's open to reducing the level of interest rate increases soon, so long as the economic data cooperates. According to him, the data of the past few weeks have made him more comfortable and prompts him to consider stepping down to a 50 basis point hike. The rate-setting Federal Open Market Committee is set to meet in December, and Waller has said that he won't be making any judgment about the expected hikes until he sees more data, including the next PCE inflation report and the next jobs report. Federal Reserve Vice Chair Lael Brainard also said that she was encouraged by the recent US inflation report, which pointed to slower price increases, and said that the Fed would likely soon reduce the size of its interest rate hikes. Brainard also said that the inflation data has been reassuring, preliminary, and is probably going to be appropriate to soon move to a slower pace of rate increases. Could this be a glimpse of possibility and positivity for Tesla? Keep watching to find out, but before you do, if you like this type of content, don't forget to hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Musk said during Tesla's Q3 earnings call that the company's likely to do a meaningful buyback next year, possibly between $5 and $10 billion. He added, however, that this decision will be made by the Tesla board. While Tesla may be waiting for approval from its board members, it may also be that the automaker is waiting for the global economy to be better before doing this buyback. During a recession, stock prices typically plummet, causing the markets to become volatile, with share prices experiencing mild swings. This change pushes investors to react quickly to any hint of news, whether that's good or bad, and the flight to safety can cause some investors to pull their money out of the stock market entirely. But the plunging economic situation is kept under control. Well, that could be a good scenario for Tesla, as they may be in a far better position to do a share buyback. Analysis like Cathie Wood and Ron Baron have shown that Tesla may still be in a good position to win despite the difficult market. Longtime Tesla bull Cathie Wood recently bought the car company's shares after the plunge in Tesla's stock price following a disappointing delivery number in the third quarter. Funds backed by Wood's ARK Investment Management bought 132,213 shares in Tesla, marking the firm's first purchases of Tesla since mid-June. In June, ARK Invest bought Tesla shares days after the car company lost its position in ARK's main fund, which it had held for about 4.5 years. The latest purchase by ARK Invest and its CEO further add to evidence that Cathie Wood sees Tesla's current low stock price as a huge buying op. In October, Cathie Wood and her team at ARK Invest stated that Tesla could expand its overall addressable market tenfold if the car maker were to develop and produce a product that could sell at half the price of its current cars. Musk had disclosed during Tesla's third quarter earnings call that the company is developing an electric vehicle that would be available at roughly half the cost of the Model 3 and Model Y. Cathie Wood also stated that Tesla is a solution to the company's current economy's turmoil. According to her, innovation is going to help solve supply chain issues as well as the energy crisis, and there's no end to the increased consumer preferences towards electric vehicles like Tesla. Wood believes that Tesla stock will become too expensive to buy in the future, and CEO Baron Capital, Ron Baron, actually has said the same thing. Baron has long been a bull on Tesla, having first acquired a stake in the car company in 2014. Between Baron's holdings and his client holdings at Baron Capital, the billionaire has a combined Tesla stake worth about $4 billion. Baron recently told CNBC that he expects Tesla to deliver outsized gains that will ultimately propel the company to a valuation of about $4.5 trillion. Baron believes that the car company's shares will soar more than 570% in the future. According to him, if Tesla produces 20 million cars per year in 2030, and sells its EVs for about $50,000 per car, then it can raise about $1 trillion. Also, if the car company gets operating profits at around 30%, a 15x multiple on the $300 billion in operating profits will eventually give $4.5 trillion. While this seems very realistic, Tesla, which is currently worth $566 billion, would have to surge more than 570% from current levels to reach Barron's valuation target. The math behind Barron's bullish valuation target is solely predicated on Tesla significantly scaling its business over the next decade and selling about 20 million cars per year. Musk already stated that Tesla plans to produce 20 million EVs by 2030, and the car company is on track to sell just over 1 million vehicles this year. Elon Musk is very optimistic about Tesla's prospects for the future, so much so that he believes the electric vehicle maker has what it takes to become the world's most valuable company in the future. Musk had previously said that he thought Tesla could be worth more than Apple. At the time, the company was valued around $700 billion, which is less than what Tesla is worth at the moment based on its market capitalization, but Musk has revised his forecast and now believes Tesla could be worth much more in the future, not just more than Apple but also Saudi Aramco combined. This statement by Musk values Tesla at $4.5 trillion, meaning that the automaker's value would have to jump from a current $566 billion to $4.4 trillion, which is something Elon Musk believes is possible. Although he says that doesn't mean it will happen soon. At the moment, Apple is valued at $2.25 trillion, so if Tesla can increase its valuation to $4.5 billion, it could indeed surpass this company in future. Barron also agrees with Musk's comments that Tesla could grow to be bigger than Apple and Saudi Aramco. In his valuation of Tesla, Barron emphasizes that the bull case he had outlined is solely based on the revenue contribution of Tesla vehicles. It does not include the other areas of the company which it's working on, such as robots, FSD, and batteries, therefore providing somewhat of a margin of safety on his investment. Ron Barron further stated that since Musk thinks robots are going to be bigger than cars, then a lot of improvements can be expected from Tesla. Musk said earlier this year that Tesla's humanoid robot will one day be the most valuable part of the company's business. The Tesla CEO said during the first quarter earnings call that the importance of the robot will become apparent in the upcoming years. He added that those who are insightful or who listen carefully will understand that the humanoid robot will ultimately be worth more than the car business and worth more than full self-driving. The Tesla robot is intended to be friendly and navigate through a world of humans, eliminating dangerous, repetitive, and boring tasks. Ron Barron remains an ardent fan of Tesla CEO Elon Musk, and has previously said that he isn't worried that Musk's recent decision to invest in Twitter will become a distraction. He thinks that Musk's investment in Twitter is helping his overall marketing, and that the Tesla and Twitter CEO is going to keep focusing on things that matter. Just as Barron is bullish on Tesla, he's also bullish on his sister company SpaceX. During a previous interview with CNBC, Barron disclosed that he's recently been investing in travel companies as well as healthcare. He also revealed that he's added another $100 million to his shareholdings in SpaceX. Barron predicts that 2025 is going to be the year for Tesla stock, where it's going to be worth about $500 to $600, and in 8 to 10 years, the automaker ought to be somewhere around $4.5 trillion. However, as a stock investor, it's important to note that this goes beyond predictions and expectations, but rather on the ability of the company to perform well in the coming future. Do you think Ron Barron is right with his predictions? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.